everyone. Welcome to Contango Ore's live investment summit today, hosted by Six. I'm pleased to introduce their president and CEO, Rick Van Nieuwenhuyse. He's going to be reviewing some of the latest news and updates that Contango has, and after, we're going to be accepting questions live. So as a reminder, if you do have any questions, please feel free to submit them in the Q&A chat found on the right-hand side of your screen at any time today. And as always, this summit is being recorded, so you'll be able to check this out in the coming days on Six.com if you want to refresh. Without further ado, Rick, I want to pass things over to you so that we can get started.
Cam, thanks a lot, and thanks everybody for joining us this morning. Pleasure to speak to you over the internet. 2022 was a pretty busy year, and 2023 will probably be even a little bit more busy. And certainly, we're seeing some good activity in the gold market. Nice move in the gold market since sort of mid-November. So I think our timing is really good. So I'll just there's one slide here I'll just keep referring to, and I'll just kind of walk through our plans to continue to advance our project to production at Manh Choh. I'll talk a bit about Lucky Shot as well, and so, as I said, 2022 was a busy year. We got started construction on the project, and at least the construction of the road and construction of the camp. Camp now is completely is finished. I was up there last week. It looks great. If you recall, the camp was an old abandoned hotel in Tok, not too far from the project, and we've refurbished that and turned it into a 200-person camp. And so it's a pretty nice camp. As we have a real excellent place for our workforce at Manh Choh to live while they're working at camp on a rotational basis. The other big accomplishment that got underway this year was Kinross refers to it as early works. It was the road access. Of course, we've had road access to the project for quite a few years, but it was a drill road access. So, and this photo here shows the road that goes up to the two deposits that you can see in the middle ground there with all the drill roads. The main deposit a little bit in the background, and then the north deposit in more of the foreground. Well, that road pretty much goes right up the ridge, and it's a good drill access road, but it's too steep for the highway trucks to maneuver. So one of the things that we're doing, started last year and will continue to do this year, is just level that road out to about a 6% grade, so that the highway trucks can come up right up effectively to the edge of the pit there and load the highway run-of-mine ore into the highway trucks with a loader. And then they can easily make the journey down the hill to the main highway, the Alaska Highway, and then, of course, truck the run-of-mine ore up to the Fort Knox mill and drop it at a stockpile area there before it gets put into the mill. So that work, original plan in 2022 was to work on the road until November and then shut down over the winter, but they found that they're actually making really good progress on the road through the winter months, and winter starts in September in Alaska. And so they just we're continuing to build the road all winter. I was up there last week, and they're making good progress. They're about a little over half completed with the road. This is a sort of a typical mine access road for the larger trucks. And I think the schedule right now has them completing the road in from the May timeframe, all the way up to the laydown area, and at that point, the two deposit areas will be connected to the highway with a good access road. We're continuing to advance on the permitting. The last permit we need, well, you never really done permitting, but I mean the last major permit we need is called the mine operating permit. It's a permit that's issued by the state of Alaska, overseen by a number of the departments in the state, that will allow us then to mine, put the laydown areas in, put all the stormwater drainage areas, temporary water storage ponds, temporary ore storage laydown areas, and PAG, potential acid generating waste rock storage areas. It's a complete plan. It's a cradle to grave kind of a plan. It's how are you going to operate during construction, during operations, and during closure. That's being completed now. It's been submitted. We got comments back. It'll go out for public comment. Planning to have that in place by April, which will then allow us to start what we call mine operations at site, at the Manh Choh site itself. And I always remind people, mining's one of the biggest challenges in mining is typically water and managing water, making sure you're keeping the water clean, but if you're going to discharge water, that has to be clean. So the fact that our project is right up on top of the hill means you have, sort of a minimal amount of water. Not in the middle of a river valley or below a water table. You're right up on top of the hill. So our water management is, on a relative scale, pretty modest. But nonetheless, that's part of the whole operating plan, and the Kinross folks have done a good job of putting a good plan to the state, and we'll expect to have that permit in April, and then start the mine site works at that time. We'll have a mine contractor. I think that'll be announced in the next few weeks, and they'll get started in that once the permit's issued, getting site prepared, and then you're actually starting mining. You're pre-stripping. You're start to stockpile your ore. You start to stockpile your waste. Sort of two different kinds of waste. Your non-acid generating waste, and then your potentially acid generating waste that goes into a temporary storage facility that'll be backfilled into the pit at the end of the mine life. So all of that's part of that plan. By the summer, they'll be mining and starting to develop a stockpile, and by the fourth quarter, we should start to look at transporting, and with a plan to be in operations in production in 2024. I think if all goes well, it might be the first half of 2024. If there's some delays, it might be in the second half. And Kinross's guidance to the public, or to the shareholders and to the public, is operations production by the second half of 2024. So right now I think we're slightly ahead of schedule. We're on budget. So I think that's all good news, and particularly when you consider we still have a pretty significant inflationary pressures across the country. But I think Kinross has developed a good plan and a good work team, and they're, as I said, they're I think slightly ahead of schedule and on budget. So good news there. What we're working on specifically is financing. Obviously, we're spending money, and it goes quick. So we are arranging the debt facility to be used to pay for the balance of the costs. And I was up there last week with a group, and got a couple more groups coming up this week and the following week. So I think on a relative basis, this is a fairly simple project to debt finance. The mill and tailings facility is built, of course, at Fort Knox. It's been operating a long time. Fort Knox have demonstrated themselves to be really good operators at Fort Knox. And so this, on a relative basis, I think this is a very financeable project. And our objective is to raise, between $50 and $60 million in debt, and hopefully get that done by the end of the quarter. Get that lined up, and that'll, kind of assure our place in getting our 30% of this project into production and starting to cash flow in 2024. So kind of, big milestone a year this year to accomplish all that. And I have to really give a lot of kudos and shout out to Kinross and their team. They've done a great job. They've been very good and supportive of our efforts to finance the project with debt. And obviously, the bankers have lots of questions, and I think Kinross has been a great partner in at answering those questions and addressing the concerns that the bankers have. And I always joke that bankers have about 10,000 questions that they want to ask you about your project. So we're working our way through that, and we'll look forward to sort of mini milestone updates as we go along here. I think the mine operating permits is a big one, because once that's issued, then we start mining, and The contractors will be in place, and the ore haul contract's in place. That's a company, a local Alaska company that's been in business for 35 years, Black Gold Transport, or Black Gold Express. They've been in the transportation business, hauling lots of equipment and supplies up to the North Slope, so they're well versed in trucking. So yeah, I think that's our plans for Manh Choh. On the Lucky Shot project, we're starting to assay. We've drilled 29 holes on the project in 2022. We've got a good amount of underground development work in, a drift in the footwall. Completed a couple of fan drilling on in the drift. So these are sort of fan drill sites where you're drilling sort of on 15-20 meter centers, and infill detail drilling of the vein to really understand the grade distribution. Assays have been slow, but we're starting to catch up now, and I think in the next few weeks we'll have most of the assays back, or hopefully all QA/QC'd, and be able to report on that, as well as use all that information along with the geologic logging and mapping that we've done underground to put together a resource model, our initial resource model, by the end of Q1. So hopefully by the end of March we've put out sort of a maiden resource based on that drilling. As I said, we drilled 29 holes. All the holes hit the Lucky Shot vein structure, and we'll let put the assay results out so people can get an idea of what we've been hitting. It'll be a spread of results. The whole vein is not going to run 20-30 grams, but our vision and what we've seen is based on the historic mining of this vein structure is that there are shoots that are where the grade of 10, 20, 30 grams per ton is focused on. Usually these are structural corridors within the whole overall vein structure. So that's certainly what we expect to see, and we'll start to put the resource model together. And we did shut down this winter at Lucky Shot. We were thinking about maybe operating all year round, but we decided we weren't quite ready. And I'm glad we made that decision because Southwest Alaska, the Anchorage area, has gotten just an inordinate amount of snow this year, about twice as much as we had last year. We had a fair bit of snow last year. So I'm glad we made that decision, and we'll probably get started back up underground and underground development and drilling probably in June of this year. So I think I'll wrap it up there and see if there are questions. Cam, I'll turn it back to you.
Yeah, absolutely. Thanks, Rick. As a note to everyone in the audience, if you do have questions now that we've entered the Q&A period, please submit them in the Q&A chat on the right-hand side of your screen. First question from Ron, though. Are there any potential permitting roadblocks for Manh Choh, or is it a clear path from here? You're
always permitting a mine that never stops. So that the next major permit, as I mentioned, is the mine operating enclosure plan. And again, when we permit a mine in Alaska, you permit how you're going to construct and operate your project during construction, during the mining operation, and then all the way through closure. That's a permit that's coordinated by the Department of Natural Resources in Alaska. There's other agencies that weigh in on various parts of that permit, we typically don't have big issues with state permits. I mean, they can take time, and there's things to address. But again, this is a relatively simple project because we don't have a tailings facility. We're not building a big mill, a big power plant. There'll be a modest power plant here, basically to keep the lights on and keep people warm. But it's when if you're not operating a mill, you just don't need a big power plant. And as I said, we're on top of the hill, so there's sort of minimal stormwater drainage type structures to put in. It's pretty typical of any construction site. You're required to put in stormwater drainage and collect the water, let it settle out. If there is any water that needs needs to be cleaned up, there'll be an RO plant to do that. I don't know that they'll ever necessarily get used, but sort of a backup system if you start to see any potential metals leaching into the water. But again, very minimal water here, just basically because you're on top of the hill, so you don't have to move a lot of water around. So yeah, we don't really expect any large issues with that permit. But and again, Kinross they've been in business for over 25 years in Alaska, so they know what's required. They know how to plan for. They know what the regulators are expecting. So I think we're in pretty good shape. Obviously, it just takes time, and the guidance is that we expect to have that permit in place by April, and so we can start mining and site constructions in May. And I think that'll be good timing from a seasonal standpoint. Typically, the snow's clear by May, June, so we'll be in good shape.
All right. Kyle wants to know when you expect to have the economics pulled together on the Lucky Shot project. For instance, the scoping study, pre-feasibility, feasibility, that can be released to investors, of course, subject to any successful resource support or report rather.
Yeah, obviously, I think we're frankly a couple of years away from that. We would plan to have a maiden resource out here in March. I think another year of drilling from underground. We can probably start to think about putting a mine plan together. So I'd say within 2 years we should probably have an economic case to sort of put forward to our shareholders and investors.
All right. Kyle also wants to know if you're planning on hedging some of your gold production at today's gold prices, and if so, when would you expect to put these hedges in, and approximately how many ounces would you plan to hedge?
Yeah, great question, and that's the big discussion with the different banking groups that we've been talking to about for the debt financing. The banks are going to make a hedge. There's no question about that. They want to minimize their risk and exposure. So I haven't looked at it today or something. The forward curve changes every day. But if we put the debt in place by the end of the quarter, say they'll hedge that gold. It'll probably be in the neighborhood of 20 to 30% of the gold that we're going to produce on a quarterly basis until the loan's paid off. Obviously, I think if you hedge today, you'd be hedging gold at sort of $2,050, something in that neighborhood. And I haven't looked at the gold price today, so hopefully we didn't tank, but say call it $2,000, and that's certainly a lot higher than what's been used in the feasibility study, which is we've done scenarios at 1,500 and 1,700. So yeah, you'll hedge. I think it's going to be in the neighborhood of 20 to 30%, and for the duration of the loan itself.
Okay. Roger wants to know, you recently issued a few shares below market price, and why that was.
Well, as I said, we're spending money out constructing the project, and we have quarterly cash calls, and so we've got to meet those. So we went to our shareholders, existing shareholders, and a few other folks, and just did a quick financing to sort of top up the treasury so that we can continue to support the construction efforts. As I mentioned, the original plan was not to construct the road through the winter, but when they found that they're making good progress and ahead of schedule, they wanted to keep ahead of schedule, so we kept spending dollars through the winter. So raise a bit of money until we can get that debt facility put in place, and once that's in place, that gets us all the way through the end game, and gives us a good amount of working capital to continue to be in the game. With the plan to have batch processing, so we'll form a stockpile at site. We'll transport it up to the Fairbanks Fort Knox mill area. There'll be a stockpile area there, and then on a quarterly basis, we'll batch process the ore, and that will require a pretty good amount of working capital. So if you're sort of adding up numbers and wondering why we're raising that amount of debt, it's because we will need significant amount of working capital since we're batch processing on a quarterly basis, and you're going to get paid sort of in chunky amounts once a quarter, but you've got to pay your bills every month leading up to that. So yeah, I think that's the basic explanation.
All right, fair enough. Kyle's also wondering, what's the updated timeline for the release of the Manh Choh feasibility study for Contango Ore's portion?
Yeah, so we're one of the things that we have been working with Kinross on is on the trucking contract. So Kinross has decided to purchase the trucks themselves and then lease them to the joint venture, the Manh Choh or the Peak Gold joint venture. And so that's resulting in less capital that for our 30% of the joint venture that we have to put up, but we'll pay more in all-in, in terms of our costs, and so our all-in sustaining costs will be higher. So if you recall the feasibility numbers that Kinross put out, they had an all-in sustaining cost of $900. This was last July of 2022 in Kinross's Q2 reporting. So we gave guidance that we said was going to be higher. We don't exactly know the number, but we're thinking it's going to be in the $1,100 range. So once the contract is finalized, called the lease arrangement between Kinross and the joint venture, then we can sort of fix our all-in sustaining costs. That's kind of the only missing number right now. I think that's going to be done in the next month or so. We'll be able to wrap all those numbers up and then issue our own SK 1300 technical report for the feasibility study.
Okay, great. Mark's wondering if you're going to be funding your 30% of Manh Choh via classic equity debt, or do you have something slightly more exotic planned?
No, I think it's going to be pretty plain vanilla bank financing. They're going to, as we talked about, they're going to want us to hedge, 20-30% of the gold to be able to make sure we can cover that. So at that point, the only risk is that for some reason you don't get the mine in production. So that that's why they're covered. So yeah, I don't think there's going to be anything exotic here. Don't like royalties and streams. There's a significant royalty on the project already with the Tetlin tribe, which is they're going to make a good royalty on the project, and of course Royal Gold has a royalty as well. And that was part of our overall restructuring of the company, bringing Kinross in on a 70% basis and having Royal Gold revert to just a royalty interest.
Speaking of that, Wolfgang is just wondering if you could go into a bit more depth explaining the partnership in detail. Once in production, for instance, are you getting a monthly paycheck from Kinross?
Yeah, so these are the devils in the details here. So the way the joint venture is set up, the joint venture produces the gold. The members actually purchase the gold from the joint venture, Peak Gold joint venture, and then sell their gold onto the market. From practical sense, the way that works is because you send your gold to the refinery, your doré to the refinery, and then the refinery writes Peak Gold a check, and then the members then technically purchase the gold from the joint venture company and then sell their gold on the market. We'll work through through an agent to sort of manage all that. It's kind of sort of operating in the background, if you will. But ownership wise, we own 30% of the gold. We're free to do that with that what we want. If we want to hedge it, we can hedge it. If we want to sell it into the spot market, we can do that. And obviously, we'll hire some experts who understand that business well, and hopefully do well at being a producer.
All right, sounds good. Ellis is also wondering if there's enough capacity at the Kinross mill to use the ore trucking model for the Lucky Shot mine.
There's plenty of capacity at the Fort Knox mill. It's a 40,000 ton a day mill. So, but just to be clear, we've had no discussions with Kinross on any kind of a plan like that. We think it's certainly something to take a look at. But as I said, we're a couple of years out from sort of formally putting an economic mine plan model around that. It's an exploration project. We think it's a good exploration project. It's certainly easy to work now, especially now that we have all the underground access in place. But as I mentioned earlier, we'll have a resource out. We'll start doing infill drilling and seeing if we can identify where these higher grade ore shoots are. We're kind of looking at something between 10 and 20 grams per ton that we think is realistic. So then it's going to be how many tons of that can you put together? What's it cost to mine? And is it worth building your own mill and permitting your own tailings facility, or do you go have a good conversation with our partner at Kinross and say it might be easier to put rocks in a box and transport them up to the Fort Knox mill, just like we're doing with Manh Choh. So we do have one other advantage on the Lucky Shot side that we don't have at Manh Choh, and that is that there's rail between Anchorage and Fairbanks. It's about 20 miles from the Lucky Shot site, so we could literally transport it down to the rail and transport it up that way. But again, no specific plans. It'll definitely be something we look at since we're already partnered with Kinross. It just seems to sort of inherently make sense. Lucky Shots are really simple ore. I mean, it's quartz and gold. There's very little sulfide. So it certainly would sort of fit the type of ore that would be easily be able to be processed at Fort Knox. And we're not sort of shooting in the dark here. I mean, Kinross has rebranded its Fort Knox operation as Kinross Alaska, and they've certainly said, hey, we've got a big mill, we've got, have a lot of infrastructure here. Let's all take advantage of it. So we've heard that message, and we're kind of exploring accordingly.
Great. Okay.
That's why all of our projects are on the road, and I think the other thing that goes along with that, you don't have to find a 5 million or 10 million ounce gold deposit to think about building your own mill. If you've got all that there, you just look at it a little differently. You say, how do I mine efficiently and transport it efficiently? And big advantage there is you don't have to permit a tailings facility. Maybe you save yourself 5 years of heartache.
Oh, fair enough. Question about any exploration occurring last year at the Manh Choh, and what plans do you have for future exploration?
Yeah, we've certainly had a modest exploration program every year since with Kinross's involvement as a joint venture and manager. We had a $3 million program last year. I'd say it was sort of half split dollar-wise between drilling, particularly right in and around the deposit. We kind of refer to that area as the Chief Danny area, and sort of drilling along strike. Essentially, there were a number of areas that we spend a little bit of exploration work, but that's certainly the sort of low-hanging fruit, if you will. So I'd say half the budget was spent drilling, on strike, and intersected some interesting things. At the time we had our last joint venture meeting in early December, but we did not have assay results. We'll have a joint venture meeting here in the middle of February, and we'll expect to see what the results were of that. The other thing that was done is, and you can kind of see it in the background there, there's a lot of territory on the Tetlin lease. It's the Tetlin lease is the size of the state of Rhode Island, so it's 685,000 acres. There's some state lands that are also part of the joint venture. So we did a lot of reconnaissance work, stream sediment sampling, some soil, some ridge and spur type sampling, finding outcrop. And as you can see from the photo here, there's not a lot of outcrop in this country. It's typical interior Yukon Tanana terrain rocks. They're all schists. They tend to not outcrop well, and so you kind of got to get down in the creeks and the gullies and to find rock and debris. But they found some pretty interesting anomalous areas. And when we get the report at the next joint venture meeting, I'll include some of that in our corporate deck, so we can talk a bit about some of the things that we're finding there. But there's definitely several other areas that are sort of hot spots from a geochemical standpoint that look a lot like what we're seeing, what we've discovered at Manh Choh. So I'm very confident we're going to find some interesting things here. And again, I just point out that it's private land. We have a mining lease with the Tetlin tribe. They've been very supportive of the project. I mean, they literally want this mine operating yesterday. So I think there'll be a lot of good exploration work to do here.
All right. I was wondering if you could provide your own sort of internal elevator pitch on how investors make money over the next number of years from today's share price.
Good question. And, basically it's, I view this as about cash flow. So, when most junior companies have to go to the market as we've been going, and, you go to your friends and family first, and then you reach out and develop a story. At today's gold price, we should be generating somewhere in the neighborhood of, $30–40 million of free cash flow. If obviously with the higher gold price and inflation will play a role here, but we should be doing really well in terms of cash flow. And then it's what do you do with that cash flow? Well, we've been good explorers. We've had a good track record of success, certainly in Alaska and elsewhere. So it's what do you do with that cash flow? How do you add value for shareholders? We've been very prudent about issuing shares. We have fewer shares than most shell companies. Certainly, your typical Canadian junior shell companies got 30–40 million shares outstanding before they have a project of merit. We've got 7.2 million shares outstanding. So we've been very prudent with issuing shares. We'll continue that discipline and think about. And I'm a significant shareholder. I own 7% of the company, and I wasn't gifted that. I didn't get penny stock. I put my own money into this because I believe in what we're doing here. And I think this is a fantastic opportunity for shareholders to continue to see an appreciation of the share value because of the success of getting this project into production relatively quickly. And I see great exploration potential both here at Manh Choh, and obviously we think the same of Lucky Shot. As I mentioned, we've been involved in some big projects like Donlin. We discovered Donlin 25 years ago, and unfortunately, it's still not in production because it's such a big project. It's complicated, and it requires a huge amount of capital. So we've kind of I've shifted my focus to one, looking at things that are near the existing road infrastructure, and two, that maybe you don't need to find a 50 million ounce gold deposit again. Maybe we just go for 500,000 ounces and get that into production quickly.
Right. Speaking of Lucky Shot, another question just about if you have any exploration results from there, and if you could just elaborate on your continued exploration plans.
Yeah. So as I mentioned, took a long time to get the drill results this year, and the labs are incredibly slow. I'm sure any exploration geologist you talk to will have the same complaint. And I honestly don't know that it's going to get any better in 2023. I just don't see it. But anyway, so we're going to have to get used to this slow, painful release of results. And we made a decision. We didn't want to release this one drill result and then wait 2 weeks and have another drill result. So we're just going to release all the results when we get them at the end, hopefully by the end of February. I think in the next 2–3 weeks we should have them all. And then more importantly really is, okay, what does this all mean? And that's the resource model. There's the vein. We've hit the vein in every hole we've drilled. So we've drilled 29 holes, hit the vein in every hole. We know it's not going to run everywhere the same. There's going to be 1–2 gram intersections, and then there's going to be 10 and 20, 30 gram intersections. So that's typically how these mesothermal veins are. They don't run everywhere. There's a vein everywhere. They roll. There's cross structures, and that's why you got to find the ore shoots. That's what they did. That's what the old timers did. They hand cobbed a lot of this ore. So they said, "Oh, that's good ore. That goes over in this bin." And the other stuff, well, it's maybe quartz, but it doesn't have a lot of gold in it. So we'll backfill that stuff, and it would go underground. That's exactly what you see. So,
all right. Well, Rick, I want to thank you as well as everyone in the audience for that matter. We've had a lot of questions in today's Q&A, but that looks like that's it for now. So I want to, as I just have, thank you again. But I'll pass things over to you for some closing remarks if you have any before we close out for the day.
Yeah, thanks, Cam. Just appreciate everybody joining us. Good questions. Keep going. Keep on our website. We'll keep that updated, and we'll look forward to sort of regular updates now. And like I said, it's exciting when you go out the site and you see trucks and bulldozers and building a road, and it'll be exciting to get the operating permits so we can start mining and stockpiling. And when we start seeing those trucks transporting the ore up to Fort Knox, there'll be great anticipation about seeing the gold, the doré poured out the other side. And I'm going to look forward to holding that first bar of gold. Hopefully, maybe sometime next year here.